So I'm Piyush Dave, a fintech professional. Today we are going to learn one more algo trading technique based on volume rate of change. I named it as VROC. It's a volume rate of change algo. First, I'm going to tell you the mathematics, and then we are going to see the actual trading happening with this algo. So let's start with the first part, understanding how this algo works. So first part is we will try to understand the threshold. For the VORC, we kept a threshold of 40%. That means the VORC should be greater than 40%. Then only trade will going to take place. The stop loss is only 1%, and the target for the trade is 2%. We are going to lock the price after 5 ticks, and we are going to work with the volume ticks of also 5 ticks only. So that means the 5 readings will be taken from the market, and based on that we are going to work. Okay, now what is the ideal situation? So first we are going to take the 5 prices from the market with the volume. So this is price number 1, price number 2, price number 3, and so on. We are going to take the volume also which is happening on that particular price. Now first, for the VARC, we are going to subtract the highest point minus lowest point. So highest point is 2200, and the lowest volume which is happening over here is 900, and divide by the lowest volume. Multiply by 100, so we get 144. So VORC, that means the volume is increasing. The volume has taken kind of a breakdown, and rate of the volume is also increasing. So we will check it with 40%. Volume is primed. Now we just need to check the high range and low range of the price in this. So the low range is 884 and the high range is 886. So this is the price range which we have locked. As the VORC is confirmed that it has a good change in the volume, now we will either wait for the price to go above 886 or the price to go below 886. So let's take the condition for the upper price range break and then lower price range break. Until there is no condition or nothing is coming in term of VORC break above threshold, we are not going to trade. And once the VORC is being break, we are going to start with the trade. So the first price is, suppose at the 6th price there is no happening, but at 7th price which is coming from the market is above the range which we have decided, that is 886. So now we are going to take a long position because there is a break up level happen, high range of breakup level, and we're going to enter the trade at 889. So 1% is a stop loss, so 880 is a risk and 2% is a target. So 889 plus 2% is a target, that is 906 is a reward. And VORC is already been taken into consideration because we are going to enter the trade only when the VORC threshold is confirmed. So we got the long at 889. The breakdown on a second side, like short trade, when to take a short trade. So 885 is a 6th price. Suppose the 7th price is 882. So it's below the price which we have decided for the breakdown. Now we are going to enter the trade. 1% is a stop loss and 2% is a target. VORC is again ignored because it's already taken into the consideration. And once the short position is entered, we are either going to end if the VORC cool down, if there is no volume is coming, either we reach the target or we reach to the stop loss. So that is the condition for exit. Okay, now let me tell you this one more time. So VORC is a kind of a volume rate of change. It's like kind of a acceleration happening in the volume. The trade logic is very simple. We are going to log the VORC as 40%. If the volume is more than the 40%, then we are going to start the trade. And once we lock that VORC is above 40%, we are going to check the range of the market. So here the lowest range and the highest range is been marked. If the price go above the highest range, we are going to trade long position. If the price go below the price range, we are going to take a short trade. So how VORC will be calculated? The highest volume minus lowest volume upon the lowest volume. That will give you the percentage of VROC. And based on that, we are going to take the volume is prime. So if the range go above the volume, above the price which we have decided, the price go above the price we decided, we are going to trade. 1% is stop loss, 2% is target. Next short side also we are going to do the same. If the price is below the range we decided, then we are going to trade. 1% is a target, 1% is a stop loss, and 2% is a target. The exit is only happen if the volume get reverse, the rate of change of volume is decrease, then we are going to exit the trade. The second part is either we reach to the profit or we reach to the loss, then we are going to trade. Now artificially I created the volume change in this market scenario. So I'm going to generate some of the news in the market artificially, and based on that we are going to change the trade pattern. So there is a best news which is coming, good news, neutral news. So there will be an artificial news will be generated in a random pattern using this simulator, and every 10 to 20 seconds one news will be generated. We have no control over the what news will be generated. So now based on this news, the market is going to react. So we are opening the exchange file. The exchange file is going to read the news, and based on that, it is going to give an impact. A change in volume also can happen if the price range changes. So let's take this. Okay, there's a worst news has come in the market. Let me adjust this window so that we can see the parallel part which is happening in the market. Okay. It's slightly difficult at the start to adjust the window. Okay. So we have two windows side by side. The first window is the window of the news is been generated. The second window is the price which has been changing with the news. So neutral news, there is a small price change, there is a small change in the volume. Okay, if there is a negative news come, then there is a huge change. So you need to observe this window first. There is a neutral news, so small drift in the price. The volume is also very low, and once the news comes, the price is going to change. Okay, you can see the neutral news is coming. I have given the 60% weighted to the neutral news so that maximum time it stay in particular range. Normally market behave that way only. Okay, now there is bad news has come. Bad news has come, so market is reacting on that. You can see the price is falling. The price is falling. Okay, best news has come. Okay, the best news has come. So the price is going to react on that for sure. Okay, major, the volume is increased. Okay, I think okay, news is applied and we get the good news, and it's happening. You can see the price also increases. Okay, so neutral news has come now, and based on the neutral news, there is a small drift happen in the price. Volume also decreases. Now this the setup is being done in a simulation environment in a way that it actually show the market behavior with the price flow. Now I'm going to change. I'm going to change uh, the algo pattern based on this volume change. So I am starting my algo VROC, and this is going to trade based on the things which we have decided. The drawdown I have kept only 0.5%. Okay, loop I have created of 3 seconds. Stop loss 5% of drawdown. Stop loss of 1%, take a profit of 2%, and 1 lakh capital has been used. So now my algo has been started. Let me adjust all the windows. Okay, this is the first window. This is the second window. Okay, the positive news has come. Okay, best news has come. Okay, VROC has been calculated. VROC is very low, so it wait for price to break down or break up. Otherwise, it is not going to trade until the price either break up or break down. Okay, the range has been calculated, and now based on that, if the price go above that range, okay, volume is prime now. Okay, the short entry at 907. Okay, we take the profit also, 900 rupees profit we have taken. So you can see if this is huge change in the price, VROC become prime, and if the price break down below that value, it is going to trade. Now currently the market is neutral condition, so the algo is not trading. We are not going to take a forceful trade in the market. We are going to wait for the VROC, that is volume rate of change, to happen. Okay, there's a small micro drift. Okay, there's a negative news come. You can see the breakdown. It has taken already the short entry. Okay, how beautifully it has taken the profit also. Okay, we have the realized profit of 2,200 rupees. Okay, in real market environment, the continuous news might not come, but you can keep running this algo. It's a harmless. If there's a change in the volume happen, then only it is going to trade. Now artificially in this we created a lot of volume, so that's why I just want to show that the trade is happening. So the range of the market which is decided is this value. If the value go above and below of this, then only we are going to trade. Okay, we got a long entry. We got a long entry, and you can see it has already reached. It has already reached. Okay, VROC is if it gets settled down, then it come out of the trade. 3,300 rupees is a profit. It's almost 3%. Uh, Now, why this is happening so fast? Because we created a news pattern. Okay, there's a positive news come. For sure, the volume is prime. It's going to take a long entry at 906. Okay, and the VROC is we come out of the trade also. It's so fast. Even in just blink, it takes it enter the trade and it come out of the trade also. Okay, so the price has been collected, the volume again spikes. Okay, the short entry has been taken at 924. Okay, either VROC has to break down. We have taken 5 trade. See how beautifully it is giving the best returns. Now in your actual environment of a trading, this won't happen this way, uh, because majority time the market is cool. But you can keep running this. If there's a volume happen, automatically it is going to trade. Okay, I've created the artificial volume in every 10 to 15 seconds to just to show you that the trade is happening. Okay, we got the volume prime and we are just waiting either for a long entry or short entry. We got a long entry at 905. Okay, it catch the data before we even think of catching it. Okay, we got the reversal and we just come out of the trade. So 6% of the profit in 6 trade. Okay, that means it's very good, but the volume which we have created is artificial, so that's why it's happening so fast. But in a real market scenario, if it happen only 1 or 2 time also, it is a really good trade, because there's a maximum chance that you're going to get the profit in this for sure. The seventh trade has been taken and it is also booked also. And we are in a 7,000. Okay, we got one more volume prime. We got one more entry. Okay, we got booked the profit. See how beautiful it is working. How beautiful it is working. The best method of rate of volume change. The acceleration in the volume make the system trade. Otherwise, there will be no trading. So I hope the volume rate of change is clear to you. Enjoy, design your own algo and backtest it and then use it.